The focus of the mid-year economic and financial outlook review, which came out yesterday, was really on getting the surplus back. They've now estimating a surplus of $1.1 billion for 2012-13, and that rises to about $2.2 billion in 2013-14. Most of the fall in the surplus between the budget and before they did the review was due to lower receipts now being estimated for the resource rent tax and also company tax. That's actually more a matter of them overestimating the amount of tax they're going to receive, really, rather than, I think, a downturn in the levels of the underlying activity. Most of the other tax lines, if you look at either consumption taxes or excise and customs duties, are actually pretty flat to higher. There's been no real changes to the overall economic forecast, so economic growth is still considered to be around about 3%, although there has been a bit of a switch in their forecast for 2013-14, slower growth in business investment and a stronger pickup in housing investment. So it's going to be interesting to see whether that actually comes through, and we'll probably know in the next couple of months or so with the approvals data if that housing industry stuff is starting to pick up. We'll talk in a bit more detail about some of the tax issues in the paper that's coming out. But probably the most significant change in relation to our clients is retaining the exemption for no tax on earnings on superannuation assets that are in pension phase. Now, that exemption is now going to be continued through until the super fund has actually paid out the benefits after the death of the member, and that's really taking a lot of uncertainty because, as most of you are aware, otherwise those earnings could well have been taxed and the capital gains could have been taxed from the start of the life of the assets. If we look at this overall in terms of economic growth and what it means for interest rates, probably still looking now at about another 0.25% cut, probably in the new year rather than prior to Christmas. The impact on the share market, I think, is going to be pretty minimal. Still looking for the overseas investors and local investors to be targeting those high yield shares, and so we'd expect to see the banks and the infrastructure stocks still moving ahead.